In this video, I'm going to give an overview of the different loan options available to students. There are three main categories of loans: government loans, institutional loans, and private loans. The first option for student loans are from the federal government. These are applied for through the free application for federal student aid, also known as the FAFSA, and come in a few different forms. The first two loans and the last loan, the direct subsidized, direct unsubsidized, and the PLUS loan for graduate students, are all loans taken out in the student's name. Parent PLUS loans are loans taken out in the parent's name on behalf of the student. The interest rates on these loans vary from year to year, but they are always a fixed interest rate. For the 1920 academic year, the direct subsidized and direct unsubsidized loans have an interest rate of 5.05%. The direct parent PLUS loan has an interest rate of 7.08%, and the direct PLUS loan for graduate students is 6.6%. The subsidized loan listed at the top is interesting because it does not accumulate interest while it's in deferment. You can remember this by thinking that the government subsidizes or pays the interest on this loan as long as you are enrolled at least part-time. The unsubsidized loan, on the other hand, does accumulate interest during the deferment period, just like any other loan. Let's look at some of the loan amounts for these loans. You can see here that the loan amount for which a student is eligible depends on their year and dependency status. The amount for which a student is eligible increases after they are considered a sophomore by hour and a junior by hour. Students can accept their direct subsidized and direct unsubsidized loans on their ONE accounts under the Financial tab. That's one.ou.edu. They must then complete entrance counseling and the master promissory note before that loan will actually pay out. The PLUS loans work a little bit different. The maximum PLUS loan amount that a student can borrow or a parent can borrow is the cost of attendance at the school minus any other financial assistance the student receives. In other words, if your student's cost of attendance is $46,000 and they have received a total of $13,000 in scholarships, grants, and other loans, then the maximum parent PLUS limit is the difference between those two numbers, or $33,000. Parents and graduate students can apply for the PLUS loan option at studentloans.gov. Approval for the PLUS loan depends on credit worthiness. The second category of loans is an institutional loan. While there are several different options available at OU, a student can apply for only one of these each year. The amount varies depending on which loan the student applies for, but most of them have a maximum of $5,000. The interest rates on these also varies, but are between 4 and 5% and have a fixed interest rate. Nearly all of the institutional loans require a cosigner who makes at least $35,000 a year. The application for an institutional loan can be found at the link on the screen. Private loans come in many different forms. Their terms typically vary. Sometimes they have a fixed rate, sometimes they have a variable interest rate. The interest rate, though, for private loans do tend to be higher than the interest rates for a federal or an institutional loan. The limit for a private loan is similar to the limit for a PLUS loan in that the student can borrow up to the cost of attendance minus any other financial assistance. Nearly all private loans require a credit-worthy cosigner. Be sure you read the terms of whatever loan you decide to choose. If you would like to review your private loan options, you can do so at elmselect.com by entering University of Oklahoma. If you'd like to learn more about your loan options, make an appointment with your money coach in iAdvise. If you do not know who your money coach is, please email us at moneycoach@ou.edu. We are located in Couch Tower on the second floor. And don't forget to follow us on social media.